Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe, and also make sure you check out my website, S&P Emini Futures Trade Zones, and I now have 3 video courses, option course, a market profile course, and a Fibonacci course, about about 5.5 hours worth of video content, all for a one-time payment of $50 only. So make sure you go check that out at daytradingfearless.com. But as always, let's jump right into the video for today. And what we're going to talk about is different time frames of drawing Fibonacci's. And what we're going to do is we're going to look at a 5-day 2000 tick chart. Now, you might ask, why a tick chart? Tick chart, you're able to see patterns a lot more clean, right? You could see resistance, support levels, draw your fib extensions, things like that. So we're looking at the S&P Emini Futures over here, okay? And what we're going to do is we're going to look for potential trade pullbacks, right? Where we could get along, looking for trends, like overall trends. How could we trade them in this video? So first thing I'm going to do is I'm going to grab my Fibonacci retracement, okay? And we're going to just kind of go from we see a high to a low. If I just drew this, right? If all of a sudden I draw this and we have 100% here, 0% here, here's the entire move, this would be the retracement back up, right, of this entire move. And with this, I like to use this chart for looking for my 61.8 to 70% pullback trade. Okay, this is actually in my Fibonacci trading course. I kind of really go over this of how to trade it. But this is essentially what the trade is, right? We could see price falling. Okay, we see a reversal. And how do you get the reversal? Usually you just draw a trend line, and when we break on the other side of it, right? Okay, now we're back in an uptrend, right? Because what's going to happen is you're going to see we're making lower highs and lower lows. No high really gets taken out until here, okay, with divergence, right? So we have divergence, so we're adding divergence into this. We then take out this prior high, okay? And so now we're in potentially a brand new trend to the upside. So what we'll do is we'll look for pullbacks to potentially get long, right? It's once you know what to look for, it's really, really not that hard. So if I zoomed in here, okay, and this was the prior high, right? Swing high, swing high, swing high, swing high, swing high. None of them got taken out, right? This one did, but then the reverse made new lows. But now you have this power move with the divergence. That's the really important thing with this is just look at RVI, Relative Volatility Index, I like on the 2000 tick chart. You could use a RSI, but I think RVI works better. But with that being said, this entire move was a power move, and we took out this high. And it was the very first candle or set in a while that took out its previous candle's swing high, right? So what I would have done was once I saw this, I'd wait for the rollover. How would I figure out the rollover? Just kind of draw a trend line. Okay, here we're starting to roll over. We're on the other side of that trend line. Okay, just something very simple and basic like that. And then what I'll do is I'll grab my Fibonacci retracement, and I'll just go from the low to the high. And what I'll be looking for is anywhere in between the 61.8 to 70% level is my entry. Okay, maybe even a little deeper into it, right? Maybe I'll buy some here, I'll add a little more, but we really shouldn't break below that previous candle's, that swing low, right? Because the divergence should be very strong, which should keep the market moving higher. So what happens was price pulls back, we draw it, it never came down to our entry. Okay. And guess what? It took off, and now we're in a series of making higher highs and higher lows. So then we want to kind of zoom out a little bit, and once we see a big move like this, let's take a look at this move right here. Okay, we see a nice break to the upside, big overextension, and then we see a pullback. Well, let's see if we drew from this low right here to this high, if we got back down to the 61.8, and look at that, right to the 61.8, came up a couple pennies short of it, but look at the move, right? Now, your target, if you buy somewhere around here, would be the 38.2, okay? And then you could say, hey, let me take everything off, or let me start to scale out and maybe look to scale out on a higher move, right? It's all up to you. There's no right or wrong way of doing that. But these are the moves. You got to be patient and wait for these extension moves and then the reversals for the deeper pullbacks to look to get long, knowing that we should not break below that prior swing low, because this prior swing low was right here, right? So you have a swing. Let's start all the way from here, right? A swing low, swing low, swing low, swing low, swing low, swing low, low, right? And so when you're able to really identify these, and hopefully this video will help, it makes trading a lot easier. Now, going back, let's look at the bigger picture of this. If we see, okay, hey, we're having just a massive run, boom. Okay, hey, let's try and get short somewhere around this level on the very first touch, right? Maybe even say, hey, go up here, right? We'll do a first trade here. We'll add here. We'll add here if we need to. We know our stop is above this high. But if we could buy, and then price starts to roll over, and look at that, we come almost right down to the 38%, which would be our ultimate target. This would be something for you to be able to kind of say, hey, okay, we're close enough. Okay, and on this move down, there is divergence going on. Okay, well, I'm not going to sit there and wait. If I could see that, and I could see as we're falling, price is kind of lagging a little bit, I might say, hey, let me just jump out, take my profits, and move forward. Now, remember, here you might have added half a quarter position, a quarter, right? And on the way out, as we're falling, you could start peeling off some of that too. These are just ideas of how to trade this pullback trade with the Fibonacci's. So it's one of those things where the 2000 tick chart just gives a very clean looks of what to trade. With that being said, let's kind of get rid of a couple of these drawings, okay? And let's look at patterns, right? We could see, well, guess what? We have a M pattern, a double top right here. We could then grab our Fibonacci extensions, draw from the high to the low, all the way back up, okay? And now we have targets to the downside. So you could say, hey, let me get short here, target 1, target 2, target 3, or as price falls, you could be patient and look to be a buyer at these for a potential bounce, right? With that being said, you know your stop would be way up here, up at this 41.80, but you could start to scale in and hopefully it doesn't get taken out, or be patient, right? It's all up to you Again, this video hopefully shows you how to use Fibonacci's with the pullback trades in a different way. Okay, like this, me personally, I would probably wait to be a buyer. Maybe look to get long right here at this 60, probably the 61.8 level. The reason being is because we have a support, resistance, kind of resistance, support, okay, the very first touch with a Fibonacci move from this pattern. I think everything lines up where I would love to get long at this 41.35 for potential bounce, right, if that happens. So that's it for this Fibonacci video. I hope this helps you, helps open your eyes to looking at a different time frame. Again, 2000 tick chart just makes it a lot easier to see these patterns and draw your Fibonacci. So as always, thank you for watching my videos. Also, make sure you check out my Patreon page where you can follow along with my Patreon portfolio at patreon.com/daytradingfearless. It's only $8 a month. And until next time, we'll talk to you guys soon.